Hey, crypto crew, imagine waking up to see your portfolio up 50% pure euphoria, right? But the next day, it's down 30% and suddenly panic sets in. Welcome to the wild world of crypto investing, where your emotions can be your best friend or your worst enemy. Today, we're diving into the psychology behind crypto markets, why we make the decisions we do, how the market plays mind games, and how you can stay ahead by understanding your own brain. Trust me, this is going to be a game changer. Let's get started. Let's kick things off with why crypto feels so irresistible. It has the allure of getting rich quick, a digital gold rush that pulls us in with promises of life-changing wealth. That pull, it's FOMO, fear of missing out, and it's a powerhouse when it comes to decision-making. You see your buddy posting about their 10x gains on some random altcoin, or you hear about someone turning $100 into $1 million with Dogecoin, and suddenly, you're itching to jump in. FOMO makes you feel like if you don't act now, you'll miss the boat forever. But here's where it gets tricky. That urgency fuels what we call herd mentality. We see the crowd piling into a coin, and we think, they must know something I don't. Social influence takes over, and before you know it, you're buying into the hype, sometimes at the worst possible time. Think about the NFT craze. Millions spent on digital art because everyone else was doing it, only for the bubble to burst. FOMO and the herd can drive irrational moves, pushing prices to insane highs and setting the stage for brutal crashes. The takeaway: the crowd isn't always wise, it's often just loud. Now, let us talk about what happens after you re-in, because crypto isn't just a market. It's an emotional roller coaster. One day, your portfolio's soaring 20%. The next, it's tanking 15%. Those price swings hit hard. When things are up, you're on top of the world, euphoria kicks in, and you're dreaming of Lambos. But when the market crashes, fear and uncertainty take over. Your heart sinks and you start questioning everything. I've been there, watching Bitcoin plummet and wondering if I should sell it all. That's the psychological toll of volatility. Our brains don't handle it well, thanks to cognitive biases. Ever heard of confirmation bias? It's when you only see what you want to see, like clinging to bullish tweets while ignoring red flags. Or anchoring bias, getting stuck on a price you paid, like $60,000 for Bitcoin, and refusing to sell at $30,000 because you're anchored to that old number, even if the game's changed. These biases mess with our heads, turning fear into panic sells and greed into reckless buys. It's human nature, but it's also why so many lose in this space. So, what's driving all this chaos? Let's decode it. Crypto markets run on speculation. It's less about value and more about what we think others will pay. It's like a high-stakes poker game where everyone's bluffing and guessing. News and events are the wild cards. Remember when Elon Musk tweeted about Tesla accepting Bitcoin? Prices spiked, then he backtracked, and they crashed. One tweet. That's how sensitive investor sentiment is. External factors can flip the mood overnight. But it's not just headlines. Trust and reputation play a massive role. A project with a shady team or a toxic community can collapse, no matter how good the tech is. Look at some failed coin scandals, tank them faster than bad code. On the flip side, a leader like Vitalik Buterin, with his credibility, keeps Ethereum steady even in rough waters. The market's a reflection of human psychology: hype, fear, trust, doubt, all swirling together. So when you're sizing up a coin, don't just stare at charts. Feel the pulse, check the leadership, the community, the vibe. That's where the real story hides. Alright, you've seen the madness. How do you survive it? It starts with building a rational mindset. That means digging into fundamental analysis, checking a project's tech, team, and real-world use. It's not as flashy as chasing pumps, but it's your lifeline when the market's screaming. Next, you need a strategy. Are you holding for years or flipping for quick gains? Set realistic goals and know your risk, because without a plan, FOMO will drag you under. I learned this the hard way. Early on, I'd buy every hyped coin, only to sell at a loss when panic hit. Now I stick to my rules. Discipline's the name of the game. Recognize your emotional triggers. Maybe it's obsessively refreshing your portfolio or doom scrolling crypto Twitter. When that urge to act hits, pause, take a deep breath and ask, is this my brain or my gut talking? A trick I use: write down why I'm buying or selling before I do it. Keeps me honest. You've got to be your own anchor in this storm. Here's the big one: knowledge is your edge in crypto. This isn't a casino, it's a battlefield where awareness wins. Understand the landscape, the risks, the tech, the trends shaping this space. Blockchain's rewriting finance, but it's messy and volatile. That's why research matters. Due diligence isn't just checking white papers. It's asking, does this solve a real problem? Education builds your foundation, turning you from a gambler into an investor. And here's the golden rule: separate emotion from logic. Feel the thrill of a pump, cool, feel the dread of a dip? Fine, just don't let it decide for you. The best investors I know treat crypto like a science, studying patterns, testing theories, learning from every move. It's a marathon, not a sprint, and every lesson makes you sharper. Imagine where this could take us cryptos still young, and the ones who master its psychology today could shape its future tomorrow. That's the power of investing with awareness. That's it for today's deep dive. If this helped you unravel the crypto mind games, smash that like button and subscribe for more. Drop a comment. What's the toughest mental hurdle you face in crypto? Let's figure it out together. Keep learning, keep growing. Your brain's your biggest asset in this game. Catch you in the next one. Thanks for hanging out. See you soon.